we talk about it during the week. We mention it every time somebody comes on talking about inflation, and we mention that you can call Fred and get some numismatic coins, or you can get some what we call currency silver, which is that the pre-65 coins, hey Fred, which are silver coins. And do you got any of those around? I mean, inflation's coming. We got to get some.
I do. Becoming incredibly popular. You know, it was sort of a side product for a while. We had a number of customers over the years that wanted to speculate on the price of silver, and that was their favorite way to do it because the premiums that they carry, even though these are actual dimes and quarters and half dollars minted by the U.S. government up to and only up to 1964, and they never, of course, could make any more of them. They don't actually carry much of a premium even over just the metal content that they're made of. So they've been a very popular product, but the last few years, there's been just a tremendous shift of demand, not only from our company's customers, but across the United States, from a lot of investors who are finding this as a very viable method of wealth protection and hedging their bets. And with the growing concerns about what's happening in the economy, more and more people are buying these pre-65 coins to the level where suddenly, for the first time in my 38-year career, it has become difficult to get.
Really?
There have actually been times where we're sold out of quarters or sold out of dimes or half dollars. And sometimes, you know, it's difficult to get any kind of quantity. It's been very haphazard this year, but we're doing okay with supplies at this point.
So give us an idea. If silver is about, 22 and a half today, this morning, what kind of an upside do we pay for these guys?
Well, you know, about probably 20% over the melt value, which, you know, if you compare that to something like some of the modern, very popular products like a Silver Eagle, a lot of people have looked at that as a way of buying silver. You know, they go for sometimes $10, $12 over the spot price of silver, which means that's, you know, 40% over their metal value. So I find the premiums on the quarters and dimes very, very attractive. And I love the fact that, you know, when we're dealing with something where there's a fixed supply, that's always intriguing to me.
Yeah.
You know, the idea that they can never go back and make more. So no matter what happens, you know, the demand should skyrocket, or, you know, people get really concerned about inflation. And we've had pushes on the market for different reasons in the last year or two. And again, supplies just diminish very quickly. And interestingly, the premium, you know, we'll call it, that they carry over melt, it has been growing this year. It's gone up 4 times this year.
Really?
As the demand continually becoming a problem for the industry in terms of supplies. So those people that bought this stuff a year ago, not only have they gained if the price of silver is higher, but they've also seen an increase in that premium value, which is one of the reasons I really like this as a way for people to acquire silver, you know, as opposed to, let's say, just buying, you know, a bar, which will never have a premium value over its melt content.
Oh, you mean like 10 ounces of silver that they sell or whatever you can buy out there on the market?
Sure.
Yeah.
Or any of the rounds, you know, that, you know, again, I've always made the funny joke that if we took a silver bar and stamped, you know, Patrick Timpone's face on a silver round out of a silver bar, it doesn't create any more value for that round than the round had beforehand. So its only value would be, of course, whatever the price of silver underlying it would be. But these old dimes and quarters and halves, not only did they have that metal, do, because of that fixed supply, see that a little bit of premium value grow as demand begins to strip supplies. A really good example of that is the old silver dollars. Because they ended the production of silver dollars in 1935, they were a little bit rarer than the dimes and the quarters and halves, but they used to trade at the same minimal premiums until about 15 or 20 years ago, where because of that supply problem, the premiums grow. Today, you know, to buy a silver dollar, it's about $40. And you're talking about a silver coin that has $20 worth of melt content. So we're at 100% premium on silver dollars, specifically because the coin side of that industry problem has become more focused on the availability. Half dollars are starting to separate themselves now from quarters and dimes. They carry about a 5% additional premium than quarters and dimes do. Again, because of the same issue, there are slightly less halves in the world than there are quarters and dimes. So there's some interesting potential there. You know, not dramatic, but again, it just provides a two-punch way for people to see a growth, not only the price of silver going up, but also the premium values because of lack of supply availability.
So, so there must be a more concerted awareness around, I guess, the world, but we'll talk about this country as far as inflation with all the news stories, right? And the big deals and the $1 trillion here and the $3.5 trillion there. And as the saying goes, pretty soon you get start talking about real money, right? A trillion here and a trillion. Remember, we used to use the term a billion, remember? A billion here, a billion there. Now it's a trillion here. Wow. So the word is out there, right? I mean, and you can't trust what the Fed, I was going to say Fred, what the Fed is saying, right? Because this guy, they just make it up as they go, right?
Well, they've been fudging numbers forever, but what has become readily apparent to the public is it's pretty hard to deny the inflation pressures that have been building, because it's starting to show up in what we know as the results of inflation. We've always talked about the idea of the two parts. First of all, the creation of the money, the creation of the expansion of the supply of money, one way or the other, and then the result of that being that it forces prices higher, because you now have more money chasing the same number of goods. That makes the price go up. On top of that, we've had a number of other fundamental problems in the economies. We have a worldwide economic slowdown that has created an environment where the central banks around the world have all chosen to try to solve that problem simultaneously by various forms of economic stimulation, which is a fancy way of saying we've printed the crap out of money in order to move the economy forward.
Thank you for that clarity.
We've been doing that. Yeah, I mean, they can get really technical in their obfuscation.
Quantitative easing. Don't you love it? Don't you love it?
Yeah, we don't want to call it printing money, but I'll give you a funny idea. So everybody has heard recently, and maybe we should backtrack this a little bit. But anyway, the Fed now has been talking about, they've been pumping so much money into the economy for so long. We are beginning to see the impact of that. And they're now getting to the point where they're beginning to consider slowing down how much money they're pushing into the economy on a monthly basis. They refer to that as tapering. So tapering. So the idea is that they're spending $120 billion a month now. They've been doing that for a little over 2 years. And they're talking about slowing that down somewhat, because they're beginning to see that the intent of pushing all that money is beginning to have the impact they wanted. So with the slowdown that they're anticipating, they haven't done anything yet. In fact, they probably won't even start perhaps the end of this year. If not, it'll roll over to the first part of next year. But even with the slowdown and what they're expected to do with their tapering, they will spend more money than they did in QE2. And QE2 was so much money pumped into the economy that people were flabbergasted by the volume of capital that the Fed pushed into the economy. Now we're talking about tapering down to that level, and that's considered positive.
I see. Yeah. So you just keep moving up the bar there, Fred. And so now we're going to go back, and that's going to go back to levels that everybody thought was crazy 10 years ago, right?
Right. Yeah. So what was considered crazy 10 years ago is now nominal. Now that's like, okay, we're back to normal. We're only at QE2 levels now. So this is how ridiculous things have been. And it's getting hard to hide the problem. So costs are going up on everything.
Yes, sir.
And on top of that, we've got some very interesting manufacturing problems. I think most people are aware of the shipping problems. They used to talk about, 3 ships off the coast of Long Beach, locked up in ports, not being able to unload was considered a big problem. 3 ships. As of this week, we're at 72.
70 ships are sitting out in the ocean waiting to get unloaded? 70?
I have clients in Huntington Beach who say you can't see the ocean anymore.
Whoa.
All you see is the ship. You lost your view of the water. All you see is the ships out late. And now we have weird problems like ship's anchor hitting an oil line, causing an oil spill in Southern California.
So this has got to be, I don't know, let's put on our tinfoil hat for a minute. Got to be a bit controlled demolition. I mean, they could fix this problem, couldn't they, if they wanted to, whoever they are? The shipping?
Well, they could print their way out of the problem.
No, I mean, couldn't they? I mean, you could just hire more people and unload ships 24/7 and unload these things? And I don't know. That seems weird.
That's the problem. Yeah, it does. So the problem seems to be just that. There aren't enough people to do that work. There aren't enough physical machines to do the work. I mean, even the The requirements for unloading the physical ships, all of the processes involved in that
Wow.
are backed up,
Wow.
and they're paying more to get ships unloaded.
Yeah.
What used to say a $500 cost to unload is now $10,000.
Oh, good.
And those costs will be drifting down through into the consumers' pockets very soon. So we'll see an uptick in prices from the manufacturing and shipping problem on top of all the inflationary pressures. So my point being that it's getting very hard to find a way to hide, this onslaught
Right.
of all of this
Right.
paper money being printed, because it's showing up where people can see it.
Yeah, it showed up. I think they tripled the cost of bringing our saunas in. They're made at a medical university in Taiwan, so we only had to raise our sauna prices $100, which. But then I was telling you about the little special air conditioner we're getting here for the studio, right? And we ordered it in April, and it came in I think 3 weeks ago. Finally, we ordered it in April. And it was 3 times as much. I couldn't even afford it. I said, well, I don't have that kind of, 3 times as much, Fred. And the guy says, well, it's crazy, Patrick. He said, I don't know what to tell you. This is what they're charging me. 3 times.
Well, everything is going up in cost. So everything that's imported is going up in cost.
Yeah.
Not only because we have a strengthening dollar and this massive amount of printing simultaneously, but then on top of that, we add all of these shipping issues, which are not going to go away anytime soon, by the way.
I don't think so. Yeah.
Going to disappear overnight. This is going to go on for at least a year. And a lot of the big, corporate entities that do massive volumes during the holidays, they're already worried about getting enough products that they want to have on their shelves to sell. So they're trying to order in advance. And, it's October already. So, I used to goof on this as the month of October, because I always used to laugh about October 1st comes around, and it always seems like 30 days has gone by, and the next thing you know, it's January 1st. It's like October, November, December have somehow,
boom,
become 1 month. They go by so fast. So here we are at the beginning of October, and I don't think we've got all the shelves loaded up for the holiday season.
No way. Yeah, no way.
So
Freddie, with 70 ships out there, now when you talk about a ship, that's a container, and they might have...
It's a cargo ship.
That's a cargo ship.
Thousands of containers.
They have 1,000 containers on each cargo ship?
Sure.
Whoa.
So think about how much product we're talking about, that's laden on these ships. These are not small little boats with a couple of boxes of goodies on them. We're talking monster size.
Yeah, man.
Ships that are in the world that we have traditionally used that process because it became less expensive. Some companies have tried to shift to go to airlines instead.
Oh, you can't.
But the problem is, a cargo ship takes up a whole airline.
Yeah.
So you can't put 1,000, boxes, crates on an airplane. And of course, it's 10 times more expensive. And how many flights from Shanghai to, JFK can there possibly be in a day? So we have a real problem there. But I think this inflation thing is going to catch people by surprise. I think the Fed, they're beginning to play games like they have before. The new game now, of course, is we're going to redefine the word transitory. This is my favorite.
Transitory inflation, right? Transitory. We're going to just change the definition, Fred?
Yeah, I think that's what they're doing. So at first they tried to deny there was inflation.
Right.
Then they were forced to have to admit it existed. So then they came back and said, okay, well, we admit that there's inflation, but don't worry, it's only transitory. Now they're saying, well, this transitory inflation might last about a year and a half, which means it's not transitory. So they're basically redefining the word in order to make the numbers work. It's getting absurd.
Like Andy used to say, what? Words of art, right? Words of art. These guys are good. And then isn't it, and it's true. I mean, the September season for so many companies is huge, right? The Christmas season, it's huge. Sometimes it could be 25, 30, 40% of their year. And now we have a Dr. Doom Fauci, he's talking about, man, we just might not have a Christmas. And then the next day he comes out and says, well, only if you're vaxxed are you going to be able to do what you want to do. And this guy's crazy. So you don't know what he's going to say. And, he's going to scare a lot of people from doing anything because people believe this. And I think he's a madman, but that's just me. So
Yeah.
Whoa. And you talk about our GDP, Freddie's not much of happening anyway, right? Our gross domestic product?
It is growing.
Is
It's
it?
starting to see signs of life.
Okay.
Yeah, I mean, it's expected when you come out of a pandemic and GDP had gone you know, down to nothing. Any kind of positive forward motion there is going to look like something.
Right.
So we are getting some nice bounce out of that economic growth, and it certainly is better than it was. But that also is inflationary, which is nice in one way because it means we're seeing the economy move forward.
Move a little
But
bit.
again, it creates kind of a problem for the Fed. So while pushing all this money into the economy was meant to help stimulate economic growth, the Fed was then charged with the idea of, well, what happens once it starts working? How
Hmm.
do you slow that now
Hmm.
down? The problem is they can't raise interest rates until they stop the asset purchase process. That has to end first. You can't do one and not the other
Okay, let's
because they're
unpack
sort of
that a
the
little
same.
bit so we understand it because you're pretty geeky, but I love the geeky stuff. So, so they right now they're buying mortgage-backed securities and buying treasuries about 120 billion a month, right? That's a billion. I
Right.
mean, a month. The Fed is creating 120 on their computer. They're buying mortgage-backed securities, which is driving housing prices. We can talk about, and also treasuries. And now you're saying they can't do what and do what? Walk back and slow that down.
Okay, so let's talk about what that means. So
Okay,
if the Fed is buying 120 billion a month in mortgages and treasuries,
right.
they are effectively doing the same thing as lowering interest rates.
Lowering
They're
it.
making money more available.
They're making money more
Okay,
available because they're just putting it out
pushing money
there
into the
from
economy.
thin air, right? They're just
Right.
okay. I'm with you.
They're creating it, and unfortunately, that's how they're doing it. But the result of what they're doing is they're making a lot more money flow through the economy,
Okay,
which is basically the same thing that you can do by lowering interest rates. So if I want to slow an economy down, I'm going to make it more expensive for you to buy that air conditioner by raising the cost of you to borrow money. And
raising
I can
interest
slow
rates.
the economy down all if I raise interest rates.
Right.
Okay, so what I want to do now is I want to move the economy forward. So I'm going to lower interest rates. Well, I've lowered interest rates and lowered interest rates, and I continue to do that, but now we're down to zero. I'm out of room. I've got nowhere else to go. So I still haven't done enough, though. The economy isn't moving forward enough.
Right.
So now instead of moving rates lower, since I can't do that anymore, I'm just going to start printing money and buying treasuries from the Department of Treasury, and I'm going to buy mortgage-backed securities, which effectively is the same result, moving money quicker through the economy. By printing it and pushing it through the economic environment, I'm getting the same result as if I've lowered rates further, which I can no longer do because we're already at zero. So if I were to raise interest rates, but I kept buying mortgage securities, those two negate themselves. They're contradictory. They don't work together. One basically is the opposite of the other. So it makes no sense to try to raise interest rates if you're going to still be out there buying mortgage securities. You can't push money into the economy and hope to slow it down if and raise rates at the same time. So
I got
the
you.
process is the order of things. The first thing that has to happen before rates go up, the Fed has to stop this ridiculous nonsense of pushing money into the economy by their asset purchases. That has to come to an end first, which is why they are now discussing taper. They're saying we're not going to stop completely. We're going to start tapping the brake a little bit. We're going to slow it down. Eventually, we'll get to zero. Once we've gotten to zero, which let's say that takes 6 months, maybe a year, then we can start raising interest rates.
Okay,
So
I'm with you.
everybody is already beginning to speculate
Yeah.
how long will it take for the Fed to raise rates? When will that happen? Will it happen, next year? Will it be sooner, later? So every time the Fed comes out and says anything about tapering, everybody manipulates and moves around and juggles to say, well, okay, that means that we're going to begin to see a little bit of this,
Right.
interest rate climb.
Right.
Watch that 10-year note. If you noticed, it's starting to go up considerably. It's no longer sitting at that 1.3% it's been locked in at for 2 years. It hit 1.5% this week. And I think it's going to be 1.7 or 1.8 by the end of this year, within the next 2 months. That 10-year bond yield is starting to go up because people are beginning to recognize the Fed's changing its position from aggressively buying 120 billion a month in this debt to starting to talk about slowing that down.
That's why that's going.
Which means that rates should start creeping
Yeah,
up.
but if you buy a 10-year bond now at 1.5, and then it goes up to 1.7 or even 2, you've lost money because the thing that you bought at 1.5 is worth less. Correct?
That's true. I mean, compared to the newer one that issues that pays higher, like the people that.
But it's only
bought
if you
at
sell it.
1.3.
Only if you sell it, you're going to lose money. Correct?
Well, it's just you're giving up. It's the opportunity cost that
Okay.
you've given up.
Right.
So where you've locked yourself in, because again, it's a 10-year note you've bought.
Yeah.
So you've said to the government, I will give you my money today. You will pay me 1.3%, but I will hold that for 10 years.
Yeah.
That's my guarantee to you. Your guarantee to me is that payment of 1.3% a year. So you've locked in on that.
Okay.
Well, now the rate goes up to 1.5%. So now I can go out and buy that same note and get paid 1.5%. Now let's say you have yours. You only have two choices. You can hang on to it for the 10 years that you promised you would and earn your minimal 1.3%, or you could try to sell your note. But again, it's going to start getting discounted because
Yeah.
why would I want to buy your note at 1.3 if I can go out and buy a new one for 1.5? It doesn't mean that somebody won't buy it, but they're going to progressively pay less and less for yours as those rates continue to creep up. So
Yeah.
it's not a really strong investment for people when rates are climbing. Those are great investments when rates are falling, because imagine the opposite. Imagine if you locked in at 1.5, but then the rate dropped to 1.3. So now as a new investor, I can't get the 1.5 you're getting. You've already locked yourself in on that. I can only get 1.3. Now, if you wanted to sell me yours, well, I might pay a premium for it.
But Fred, buying a bond now at 1.5 for 10 years, I mean, you'd have to live in Alice in Wonderland to think that there's not going to be higher inflation than 1.5 over the next 10 years, right? The way this thing is structured, right?
Well, that's the negative yielding interest rate environment we're in. So according to the new government statistics, inflation is currently about 5.3 to 5.4%.
Are they admitting that much?
That's their number now.
They're admitting that
Yes.
much? Wow. Which means it's probably double.
5.3 to
Right.
5.4.
It's probably double that.
Yeah. And again, I've said this before, and I don't think people think I was crazy, but I'm thinking in the last, between the last year and a half to the next 2 or 3 years, on an average, the increasing costs for an average consumer of basic goods and services is going to be pushing close to 30%.
Whoa. Now, wait a minute. Whoa. You mean, so you think like you go out and buy a pound of ground beef or milk or, I don't know, coffee or something that's going to be 30% higher in the next 3 years?
Yep.
Why?
Compared to, let's say, 2 years ago. I think between now, from 2 years ago till the next 2 years from now, we'll be looking at a roughly 30% increase in cost. And the problem is it happens subtly.
And you don't realize
If you see that 1995 price for the pound of beef, the next thing you know, it's $20.79. And,
Right.
when it goes from $20.79 to 21 and a quarter, doesn't feel like a lot of change. But you just keep looking at it, and the next thing you know, it's $22 and $23, and you go back and go, wait a minute, wasn't it just 19 and change?
Wait a minute.
Now suddenly it's 22, 23.
Yeah.
I went ahead and looked at beef. There was a steak for sale, $39.99 a pound. I mean, it was supposed to be some extraordinary Kobe.
Oh.
I don't know what it was, but
Yeah, it was
anyway,
about
I looked at
that Kobe beef thing, that Kobe beef they call it, or whatever. Yeah.
$39.99 a pound, though. I'm like, $40 for a steak. Like, this is not a restaurant price. This is just the beef itself. So,
Yeah.
I mean, that must be $100 steak at a restaurant.
Oh, I tell you. Fred
anyway,
Dashevsky
yeah,
is with us. It is the Real World of Money. We do it the first Monday or the first Wednesday of every month at 10 o'clock Central Time for an hour or so. And you can talk to Fred if you'd like to kind of hedge your inflationary whatever you're thinking about at 800-878-2646. And Fred's got a whole team there. Talk to Fred and his team, and they'll come up and take care of you. And if you want to get some, the good old St. Gaudens, those great coins, Fred, that back in the what was it? It was a 20s, right? Is when all those babies became available, when they shipped them over to, was that right, in the 20s? They shipped them over to,
Well, yeah,
to
they
Europe?
started production in 1907, and of course ended in 33. Um, there was a long period of time where a lot of these did get shifted over to Europe in the mid 30s. Of course, once we had the gold standard change in 1933, and you could no longer redeem money for gold coins in the United States, you were able to do that in Europe. And a lot of these gold coins did get sent to European central banks in the 1930s. By the late 70s, after Nixon had removed the gold and silver standards from the US dollar, they started floating back into the US. But yeah, there was an awful lot of
Yeah.
activity.
Those are some real fun
$20
coins. Let's go on the phones. Good morning. Who's this? You're on the air.
This is Lance from Escondido.
Hi, Lance. You're on the air with Fred Dashevsky. Go ahead.
How you doing, Fred? I had a question. So just like when they closed the gold window, you couldn't redeem your dollars for gold and silver. What happens to numismatics versus, I guess, bullion if they were to actually achieve the digital Fed coin and programmable money and all that? I'll take my answer off the air.
Yeah, we think that's coming. It's called the central bank digital coin. That's probably in our life, whether we like it or not. So what would happen to the numismatics?
Well, here's the thing. If we move to a digital currency, here's how I look at this. First of all, we are so close to having digital money now that it's going to be as overwhelming a change as people think.
Right.
Think about the number of transactions occurring in the world right now in cash. It's getting smaller and smaller all the time. So about everything that most people do is either, through some sort of pay service or credit card. Even if you write a check, there's no physical cash trading hands there. The banks shift capital from one account to another digitally already. So, if we move to a digital currency, the biggest concern I have is transparency. And that's problematic for me because now we no longer know how quickly the supply of money is exploding. And if I can't count the number of dollars, how do I keep track? So I have a lot of concerns about this. Now, the impact it would have, I think, would be very positive on both bullion and numismatic coins. I think there would be a tremendous drive of capital away from, I refer to it as paper money. We'll call it now, let's say, digital money, because people will be concerned of its relative inflation rate increasing. The rate at which the government and the Fed would be able to increase inflation would go up if we were completely on a digital system, because it would be so much easier. We could cut out a whole portion of the rigmarole of having to go ahead and having treasuries be bought by the government, through the Fed, and then turn into capital, and all that nonsense could be stopped. We could just simply create more money. Plus, of course, now, if you want to get conspiratorial, talk about the idea of being able to follow a transaction. If we're on a digital system, whatever privacy financially we may have at this point, if there's any, it's over.
Yeah, it's over.
It's completely gone. And I think that concern would drive capital into both numismatics and bullion. And I think because of the fixed supply of the numismatic side of the world, the demand increasing, and this massive increase in the supply of capital, whether it be digital or paper, would increase the value of those kinds of coins. I think it would be very positive for that market.
And also, if they pass this 3.5 trillion, I don't know, you probably know in there is they want to lower the amount that somebody has to get notified to $600 rather than $10,000, right? You see that? That's in that bill.
Yeah, what they want to do is the IRS wants to start following transactions. It's more about now that they want to say, okay, we want to prevent the holes in the economy that we can't see. And one of those holes still remains cash. How do they prevent me and you from meeting in a parking lot with a briefcase, and I hand you $100,000 in cash and I buy something from you, we both go ways. How do they know about that transaction? They don't. So how they locked it down is by forcing the reportability requirement on the banks. So that means that now you have this briefcase full of cash. What are you going to do with it? You can't put it into your bank account because they've already suggested that anything over $10,000 that's put into an account in cash has to be reported. IRS wants the 1099. They want those forms filled out. And they're starting to push these anti-money laundering rules on dealers like myself in bullion transactions, on the banking industry for cash transactions. So the regulatory issues are getting more strict. And now they're talking about this $600 benchmark. So
Yeah.
the IRS is basically, it's one more proposal that's out there to say what we'd like to do is to be able to have a record of anything that moves in and out of a bank at more than $600. Really? I mean, that's insane. So
Yeah.
effectively, they're going to follow every transaction,
Yeah.
and that's it. So
Yeah. That's what they want to do.
I'm not a big fan of it. It really is infringing upon our rights and our privacy. I mean, I recognize the idea we are in the, surveillance capitalism economy, but we have given up our rights in the last decade or so, more so than any time in my life, to the point where I just don't think we have any financial privacy left. So
Yeah, there's
I
not.
worry about it.
Yeah. Let's take
Ted
another
is
call.
discussing this
Good morning. Who's this?
this week?
I just had a follow-up question about, we know with cryptocurrency, they're going after the regulators to exchange those
Right.
crypto coins into actual dollars. It seems like they're going after the coin dealers to convert our numismatics back into the market. My question is, I know Andy, when he was alive, he had a sneaker network. Are you guys open to going back to a sneaker network or nothing? Where it's just going to be a completely apartheid system of cash? Because if we're holding a lot of numismatics and we can't convert them into buying goods and services out in the world and preserving our wealth, is greatly hindered on transition in that. Because that was the biggest thing with Bitcoin, is like, how are you going to get it out of the system to tangible assets? I'll take my answer off there.
Thanks. So I don't know what he was talking on sneaker. What was he talking about?
I get it. So basically, here's the thing, and the numismatic market is still not requiring any reportability at all on my end. The bullion market is. So the bullion world is regulated. Now that means that if you sell me, rounds of silver or gold or bars or anything that is not legal currency of the United States, not numismatic, I am required to file a 1099-B with your name and your social security number, and I have to, by law, file that information with IRS. In other words, they've put the onus on me
Right.
as the dealer. And their rationale there is that they don't know what you own or where you bought it or how you paid for it, but if they require me to report any of the checks that I write to people when they sell it, they can capture everybody. This only applies to bullion, though. Someone can still sell me $1 million worth of numismatic coins. I am not required to file any forms with any government agencies. Now, the person who sells it, if there's a profit, they are supposed to report that, but at least it's up to them to report their own gain. It doesn't fall on me to have to do it. I don't believe that will change. I think the numismatic market will remain free of these regulations, for the simple reason that, as bizarre as this may sound, those $20 St. Gaudens we were talking about are legal currency. They're legal tender of the United States. That definition is important. It means that no one can prevent me from using it as money. By federal law, I can spend a St. Gaudens as $20 face value. And because I can do that, and no one can prevent me from doing that legally, the IRS can't claim that that $20 gold coin has any more value than its $20 face value. Because if I wanted to pay the IRS, if I owed them $100 and I gave them five $20 St. Gaudens and I asked them, how much value are you applying to my debt? They will look at those and say, those are $20.
Yes.
And if they're going to say they're only $20 when I'm looking to use them to pay them, they can't suggest that they're worth anything more than that on the other end. So this prevents this reportability issue from changing. And I believe that they've defaulted to leave it alone, also because the volume of numismatics that exists in the world in terms of its value, it just isn't big enough to be bothered with. I mean, I know there's billions of dollars worth of coins out there, but honestly, relative to the size of the economy, it's nothing. So, it's too complicated for the IRS to try to change the constitutional laws about legal currency, the fact that these things are legal status, legal tender. So they're going to leave it alone. And I think the numismatic market will remain unregulated in that sense.
Yeah.
Now, the bullion market, every year it seems like they ratchet down a little bit more on those reportability requirements. They are now pushing very hard on dealers to follow the anti-money laundering rules, which I do not like at all. Now that indicates to me that, let's say, Patrick, you wanted to give me, 10,000 in cash. Not only do I have to report it, but somehow I'm supposed to know that you earned that money legitimately. And if it turns out you didn't, I'm going to be liable for encouraging an illegal transaction.
You're kidding me, really?
So,
and I'm Italian, so you got to worry,
I worry about the reportability issues. This is why I don't deal in the bullion products at all.
Wow.
I stick with the numismatics. I think people can be safe in their knowledge that the numismatic market will remain, unregulated in that sense.
And and so the new thing out this morning in the last few days is, that the Treasury is just going to create a $1 trillion coin and give it to. Did you see?
Coins,
did you see that? Yeah. Just create $1 trillion. Come on, Fed's not going to take that. They loaned us dollars. You think they're going to take some coin that we say is worth $1 trillion? It's so bogus. These stories come out. 3 people sent me this thing this morning. Fed is going to release $1 trillion coin. Yeah, right. The U.S. Mint, rather. Not going to happen. Yeah.
Don't hold your breath.
Yeah.
So these things come up as ideas from time to time. And again, it points to the ridiculous nature of the status of our economy when these bizarre ideas get floated around and people think, take them seriously. What they're basically saying is, you and I have talked about this. Couldn't the U.S. government simply print, the $31 trillion that we owe and pay off all of the debt? Well, yeah, of course you could do that.
Of course, they bomb the White House, sure, if you do that. You just don't want to do that, You'd be taking your life in your own hands.
They don't really help. They don't change anything. So, interesting ideas to float around and kick around for a goof. But don't hold your breath for that.
It's not going to
The problem is that the Federal Reserve does not have a good method to resolve the current problems because we're playing from a playbook that doesn't exist. This has never happened before in the U.S. economy where we've carried this much debt, this much interest on the debt, this much spending of money we're not bringing in. The gap between our spending and what we're bringing in is getting wider and wider. The government's needs for money are climbing more and more rapidly. And guess who they're going to lean on when they run out of money? Hello. I need to raise your tax, Patrick, because I need more money. And, you got some, I don't.
Oh, my God.
Up your pockets, will you?
And I think we're still short close to 400 billion or 350 or 75 on the Social Security thing, right? That's, people don't know that, but it's underwater now. There is no trust fund, right? So it's
been underwater for a long time.
It's been for a long time, man.
Talk about that lie, but that has actually been bankrupt for a long time. And you got to remember back in the Clinton administration and then following that, all of the money that was in the Social Security was replaced by first Treasury bonds, then replaced by bonds from the Treasury Department, and then they were replaced by IOUs. And, effectively, we've been floating this nonsense for more than 10 or 15 years now, and we've been basically creating the money every time we need to write checks for Social Security. And then we get to this point now where we have a debt limit coming up, right? So everybody is looking at this now. And this is about, I think we're up to 100 times that we've raised the debt limit.
Sure.
It's a kabuki theater, it's just let's dance around and make this whole little, gameplay. Unfortunately, it becomes a political issue. But we're about October 18th is the point at which Janet Yellen says we're out of money. And, so we play these games where we pretend that we have funds, and we talk about that word of art when it came to transitory inflation. They did the same thing when it came to the Social Security, quote unquote, trust. By definition, a trust means that money has been segregated for no other purpose except that for which it was put away.
That's a trust. That's the word, right?
Well, we violated that. We violated that trust and took the money out of Social Security and dumped it into the regular Treasury in order to create a positive flowing economic environment. Back in the Clinton administration, we did this. So it's been since the 90s.
Didn't Andy teach us, though, that started with LBJ? Didn't he, in the unified budget thing way back then?
Yeah. It began then, and it was done for the most part. The real big swoop was done during the Clinton administration where, again, Clinton's trick to say I have a balanced budget came from them taking the money that was in Social Security's quote-unquote trust fund, dumping it into the general budget and saying, well, look, we have this surplus of money. Therefore, when we balance everything out, we actually look like we have positive cash flow, which was nonsense because that wasn't their money. That's the public's money. That was supposed to be held, again, in trust. So that trust was violated. We've stripped those funds out.
But
and effectively, we've been printing the money we need for Social Security checks every week since then.
But you got to believe him because Bill did not have sexual relations with that woman. I mean, you just got to believe Bill. I mean, come on. How can you not believe him?
Now, since then, things have gotten worse because not only did we strip the money out, but now as the aging of America has continued, what's happening now is we have more people withdrawing from Social Security than are contributing. So even if you presume that the money was in the account, we've been watching it deplete every month, it's getting lower and lower. Why? Because more people are pulling out money than we're putting back in. You know, if you did that in your checking account, if you started with $100,000 and you took out $8,000 every month but only put in $5,000, you know, you're going to keep chipping away at your available balance until it gets down to zero. And we've crossed that barrier as well. So that's the point at which people have raised this concern again, pretending as if we can ignore the fact that there really wasn't any money in there in the first place. Even if we presume that there was, we have begun to deplete it because we have more people.
You can't even make this up. You know, it's getting to the point where it's so ridiculous that the only, I mean, I don't want to, you know, be throwing you softballs underhand because you do this for a living. But if you don't have real money, man, you've got nothing. I mean, we don't have any idea what this Kabuki Theater is going to do 5 years from now, Freddie.
Sure.
We just don't know.
Let me tell you something. The most dangerous
we don't know.
we could do as a country is default on our debt.
Yeah.
If the government can't get its act together and the Republicans and Democrats cannot come to an understanding that they can't play this game, we're playing Russian roulette, or chicken, I guess would be a better analogy. Yeah. If somebody doesn't swerve, and we crash and we let this go down and do not raise the debt limit, if the United States defaults on a debt instrument, it's game over.
Game over. Game over.
That's it.
Game over.
It's game over. No one will have confidence in the U.S. government. And again, we are the world's reserve currency. The dollar has been strengthening in the last couple of months, not because we look so great, but even with all of this nonsense we're talking about going on, believe it or not, we're still better off than most other countries around the world.
I know that's really what's scary, right? We are, as Andy used to say, and you have said in the past, we're the cleanest dirty shirt in the closet. And what was the other analogy Andy used to use was that all of the currencies are falling out of an airplane with a parachute. We just have a bigger parachute, right?
We just have a bigger parachute, so we're falling a little slower. That's a great analogy because that's exactly what's happening. So now if you're somewhere outside the U.S. and you need to park your money somewhere, first of all, your banks are not paying a positive interest rate, even though we know we have negative yielding, like we talked about that 1.5% 10-year note with a 5.4% inflation rate is actually losing money. Imagine if you couldn't earn 1.5% and you got minus 3% on your money. That's what most other countries are offering to their constituents and their citizens. They're saying, we can't even pay you a positive yield. We're going to offer you negative return on your money. And guaranteeing that you'd only lose, let's say, 2% or 1.5% of your money every year is so attractive to you that you're willing to lock money up and say, I'd rather guarantee that I'm only going to lose 1 or 2% than to take the risk of losing more. So I'm going to accept that as a method of buying my future's property values and try to retain the value of my capital. I'm going to buy a negative yielding investment on purpose.
Yeah.
How bizarre is that?
That's bizarre. Fred Dashevsky is with us. His company is uscoincapital.com, and you can check him out and give him a call if you'd like at 800-878-2646. It's 878, right? 878-2646. Patrick Timpone, we have a few more.
This is exactly why.
I'm sorry?
This is why a $20 gold coin that used to cost, I'm just saying, this is why that $20 gold coin, that St. Gaudens, mid-condition example, used to cost $580, and today it costs $2,500. Why did that happen?
Wow.
The coin is the same. The weight is the same. So what's changed? It's the number of those dollars in paper that you have to use to buy that same coin because of its fixed supply. So I would encourage investors today, think about what this is going to look like in 5 years.
Yeah.
At the rate at which we're printing money and the government is deficit spending, how much do you think it's going to cost to buy that $2,500 St. Gaudens 5 years from now? It's certainly not going to get cheaper.
Can't. And people can all, excuse me, they can always sell, excuse me, they can always sell them, right? No matter what shape the economy is. People ask me that all the time. Well, what if this thing just goes, really bites the biscuit, so to speak? You can always sell these coins, can't you? Right? You can always sell them. There's always buyers out there.
There always is. It's a fluid market. If you think about the stock market in the same sense, there are always buyers and sellers.
Always
no matter
buyers
what's
and
going
sellers.
on. Somebody wants to liquidate and somebody wants to buy. So, and again, and the coin market as it stands, it has fluctuated, but it has been around and has been solidly around for more than 200 years. In other words, we've been buying and selling gold and silver coins in America since before they even built the physical stock exchange
Wow.
on Wall Street.
Really?
Before the building was built,
Wow.
we were already trading in gold and silver coins in America. This market has survived everything we've been through. Great Depression, recessions, every kind of economic environment, hyperinflation, and now what I think we'll be heading toward is more like stagflation again, which we haven't seen for a long time. But, so there's always buyers. You can always turn it into money. I think people should be putting away a portion of their wealth in this form now, because I just don't have confidence that the U.S. paper dollar has any possibility of sustaining its buying power under the current pressures that it's facing.
Sure. Yeah. Well, that makes sense. What do you make of Fed dude Powell saying that we're really start to turn kind of a little more bullish on Bitcoin and say that we're not going to mess with it? Wasn't that interesting why he made that comment? What do you think?
Well, not mess with it for now.
Yeah, for now.
They're already discussing transaction reporting requirements of $10,000 in Bitcoin. So they can apply the same premise. They don't know who bought Bitcoin. They may not be able to trace the transactions, but what they can do is say, if I want to pay in Bitcoin and that transaction exceeds $10,000 in value, that transaction becomes reportable.
Of course.
And again, they make the dealers responsible for it. So they begin the trap the same way they did with cash. When they started the war on cash and they began with that $10,000 reporting requirement, they knew that they couldn't go back in time and say, well, who has a stockpile of money under their mattress? I don't know. But if I can make everything that people try to sell or buy reportable, doesn't matter how long they've had it or where they got it.
Yeah.
I've captured that revenue stream and I've prevented those transactions from occurring without my knowledge. I think that's the same thing that's going to happen with the crypto. I think they will impart these transaction limits. So that will be how they begin to regulate them.
Yeah. And
there's no way.
Yeah, we had a crypto nerd on from Hong Kong on Monday, Fred, and he said the same thing. And he said that really a lot of the action is going to be going on the dealers, the people that are buying and selling, and that's where they're going to know. And they're going to know if Patrick buys a Bitcoin or if you buy a Bitcoin. And, it's interesting. A lot of you gold guys, and I know Andy was really bearish on Bitcoin early on, and he used to call them lampshades, but obviously they're going to be around. Bitcoin's not going to go anywhere. But all in all, I think it's going to be really bullish for gold and silver. I think that, just my own personal opinion, that people are going to see more and more that these things are just little digits and flips and, right, little puffs of magic, whatever it is, even more so than a dollar. At least the dollar has,
Sure.
you know what I mean? And start to think about what's really money. I think it's going to be bullish for gold and silver in the future, just my opinion.
Well, I think the cryptocurrency thing is interesting, and as I've said before, I don't have a problem with anybody that speculates on them, but please don't put them in the same category as a physical ownership of like gold or silver coins, where there is a tangible, actual item. If I ask you to show me a silver dollar that you bought, you can hold it up to the camera and show me the coin. You can hold it and touch it. If I ask you to show me your Bitcoin, what do I get to look at? And is there any real value there, or is it just a price? And I've said this before. I think it's an item that has a price, but really no value, which means that there's nothing underlying that supports it, which means nothing can prevent it from dropping. They talk about the volatility of currencies like the cryptos. They're 400% more than an average volatile stock. So if you're not a speculator, it's not something you should even be looking at. Now, if you are, nothing wrong with taking a peek at it and, maybe playing around with it a little bit because, we don't know for certain what's going to happen in the future with these things. But be careful, because if a person can come out and make a negative comment and drop the value of an asset by 30%, that's a big problem.
Well, they can do it too.
Elon Musk comes out and, and Bitcoin can drop.
Or the other way too. I mean, it went up 10% when Powell said his thing on. All right, yeah, it went up 10%. I mean, it's $55,000 this morning. That's like, you talk about fairy dust, but
yeah. So great for speculators, but again, I view these things in different classes, and again, there's nothing better than the physical ownership of a physical, tangible asset to protect one's wealth.
Not even you wouldn't. Would you ever let somebody else hold your gold and silver coins?
No. I think that defeats the whole purpose. I think the idea is that individual people in America need a form of physical wealth that they have control and ownership of. That's why I've only dealt with gold and silver coins for the 38 years I've been doing this in one fashion. You, as the investor client, immediately get physical delivery of the product. I do not hold or store coins for people. Again, that completely defeats the purpose. The whole idea is that wealth be in your possession, tangible, physical wealth that you own and have control over. And that's the way it should be.
Here's an email from Chandra and Craig. Good morning, gentlemen. My husband is an American with permanent residency in Canada, and I'm Canadian. We live in Canada for now, but with all the societal changes, we may move to the U.S. within the next couple of years. Do you recommend one coin with a dual purpose between the countries, or should we just invest in separate U.S. coins and Canadian coins to cover our bases?
Well, I don't deal in the Canadian coins because here in the U.S., of course, like the Maple Leafs and things of that nature are a bullion product. And as we already discussed, I have issues with dealing with bullion products. So, that ends that conversation as far as I'm concerned. It limits, availability. The only thing I would work with would be United States coins. Now, if I were in Canada, again, I might look at things a little bit differently. And I don't know how strong the numismatic market in Canada is, to be honest with you. It's really not something I'm tremendously familiar with. But, since you can own American coins anywhere in the world, especially if you're planning to move at some point into the United States, and therefore you'd have a big market from which to sell, I would say, buy the U.S. coins. I think they make a lot of sense.
Yeah, she could just hold on to them anyway because she could always sell them, if she lives in Canada, correct?
Sure.
Right.
Absolutely.
Yeah. So before we go, this whole Fed coin thing, and I know the ECB is looking at it, and you just kind of know it's coming. You just see it too much. But I don't understand. Maybe you could have some theories on it. I mean, you're talking about two separate entities, right? The Federal Reserve Bank of New York is owned by banks, not federal. We know that. And then you would have them issuing coins to people. So that takes the Treasury totally out of the picture. I mean, how would that, isn't that that's a whole nother world, isn't it, Fred?
It is. Powell has talked about this to some degree where he said, he's not in a rush to create a digital currency because he said he'd rather do it right than be first.
Right.
And they have to discuss all of the problems that would be
like that
involved in creating.
Like that one.
Including that one, right? How do we fundamentally do it? So, they're at the beginning stages of conversations within the Fed about how it would work. The mechanics of it alone are going to take quite some time to kind of hammer out, including how does it get issued? How does it get controlled? Is the Fed going to be directly creating currency? I don't think so. I think we'll still end up going through Congress. I think the Fed will work through the Treasury Department in the end to do this if they do. But I think we're a long way off from seeing it.
Yeah.
But I know that the Fed has begun the conversation. And again, my concerns about it are I think at some point they'll conclude the conversation. They'll hammer out the mechanics. It'll be a couple of years, let's say, from now. They'll come up with an answer of how it would work. They'll have worked out all of these issues. And then, suddenly they're going to have to sell the public on the idea. which again they'll do by the convenience. It's
Sure.
always the convenience.
You got the phone thing.
They'll make it seem like, oh, this is better for you. If I need to give you money, I don't have to write a check, and you have to wait for it in the mail, and then you deposit. Well, imagine if I could just punch my keyboard and boom, Patrick's got more money
Sure.
in his checking account.
Well, that's what a lot of people are arguing, that it's going to be a control mechanism too, right? Like if Fred is being a good boy, we can give you more
Sure.
Fed coins because you've been behaving yourself, and then maybe did you
Well,
get
now, if you wanna
did
get
you
down
get
that
vaccinated, right? Then you can maybe get more coin. I mean, this could really go sideways really quickly.
Absolutely. I mean, talk about a loss of financial privacy.
Whoa.
If they get to that point where we've gone exclusively to a digital currency, you're absolutely right. I mean, talk about control.
Whoa.
If they choose to go that route,
You don't even want to think about it.
they started talking about, they used to talk about it in the joke was, I want to order a pizza,
Right.
and we're in a digital world, and I get rejected on the order because they come back and say, oh, no, we think your cholesterol is too high. You shouldn't be eating pizza, so
Yeah.
you can't buy a pizza.
And that little
Now, how
joke
do
is
they
not
stop
going to
it?
be, someday that may be true. I mean, the way, and then people, conjecture, Fred, that's what this 5G thing is all about, to coordinate this whole thing into a cell phone, right? Everything.
Control.
I saw,
Well, this is the whole point, right? Control over your life
yeah,
comes down
You
to
think?
how much freedom do you have?
right.
Well, do you have freedom now, in terms of privacy? Do you have any kind of freedoms now in terms of your intellectual property? Do you have freedoms when it comes to your finances? And this is one of the things that I think we're drifting away from, is that
Yeah,
so many transactions and everything we talk about, it's all about reportability. This $600 nonsense. I mean, people won't be able to do anything anymore that's private. Now, is that good or bad? We can have that philosophical conversation, but I hate the idea
no,
that I have no personal choice and no personal freedom anymore in conducting commerce. I just, I find it abhorrent. I don't think this was the intention of America, to be in that kind of position where we subjugate our control to a government agency, or in this case, a banking institution,
right.
to start defining my life because they control the currency I'm forced to use. I don't like it.
Yeah. I guess in not a perfect world, in a fantasy world, if we just had a whole bunch of our assets in gold coins, we could just sell them whenever we needed dollars and buy stuff. I don't know.
Sure. Well, we had a constitutional requirement for gold and silver for a reason. One of those reasons was to prevent governments from intervening in people's lives, and that people could know that they could work for a living and earn $1 and put it away, and nobody could interfere with the value of that money, therefore controlling their life. That was the whole purpose.
The whole point, right?
Of gold and silver coinage.
Yeah.
Right? It was to avoid governments from interfering, in your life indirectly. If I can't physically stop you from going to the pizza joint, but I can control your money, well, I can still control your actions. And I can start dictating to you based upon all the information I've gathered about you that you voluntarily have given me. Thank you, through your, social media and everything that you've told me. I mean, can anybody envision if we went back, let's say 20 years, and I said to you, Patrick, here's what I'd like you to do. I want you to take a picture of yourself. Every friend you have, I want you to tell me where they go, what they do, what they like to eat, where they like to travel, how much money they spend, what their favorite things are, what movies they like to go to. And please, would you provide me all of this information on everything that they're doing for the rest of your life? Would you do that for me?
No.
People would have said, what are you?
What are you, crazy?
This is insane.
And now we just go on and do it.
Yeah, look at what we're doing.
Well, I'm in Facebook jail right now, so I don't get to do it because I'm on timeout.
What did you do now?
I'm always in timeout. They put me there 30 days every time I turn around. But we're on Telegram, folks. If you want to see us on Telegram, and you can do what you want. It's a pretty cool place. You don't do the Facebook thing, do you, Freddie? Do you?
I do. Yeah, I did it. I started it many years ago because at first, it was about old contacts, people from
Sure.
high school days. And, I've been out of New York where I grew up for 30 years. I've been living on Hilton Head. So it was a great way to keep in touch with family and friends. And it was fun. It was, but over the years, it drifted from being a fun social media to it started to shift more towards, political.
Yeah.
And then we started getting the artificial intelligence intervening in what I see on Facebook and how, I get information versus you. And all that combined with the way Google operates and the way it has changed, it's become something I don't think anybody really quite anticipated. But I'm just stunned at how much information is available. I mean, if you ever watch the cop shows now, any of the police dramas or any of these great movies and stuff, when the criminals are being, chased by the whatever department of, the police department, they're all like, oh, well, let's track their phone.
Right.
Or let's check their social media and see what they've got all of this information at their fingertips.
Yeah.
How did they get it? We provided it to them. We gave these rights up very, very readily. I'm afraid people will do the same thing financially when it comes to these, digital dollars, because we'll be convinced that the convenience of this outweighs the giving up of your rights.
I saw an interesting documentary in Beijing, and everybody buys everything with their phone. That's all they do. That's what they do. They don't even have any yen or whatever they use. It's all phone. I mean, I'm talking farmers markets, and they got that little code thing, and you just, that's what they do,
That's what I mean. I said it was so close to a digital world now that I don't really see a lot changing, really.
No.
Except that loss of privacy. And again, that transparency out the window.
Well,
those two things together frighten me.
Watch your cholesterol, because we want you to have your pizza when you want it, Fred. If you like to, if you like to call Fred and his team, it's 800-878-2646. 800-878-2646. You're Monday through Friday, kind of like normal business hours, you guys?
Yeah, 10 to 5 Eastern time, Monday through Friday. I'm at my desk. Of course, I'm working a lot more, but those are the hours at which I tend to be available on the phone. Yeah,
and you're willing to talk to just pretty much anybody, even talk show hosts. You'll talk to them. What do you care, right? All right, Freddie, thanks for being here, brother. We'll see you next month. Take care of yourself. Tell your staff hi.
Always a pleasure, Pat.
The gang. Thank you very much. See you soon.